Hello, listeners, and welcome back to another episode of Cognitive Dissidence. As usual, I'm your host. I'm Jacob Shapiro. I'm also a partner and the director of geopolitical analysis at Cognitive Investments. Rob and I are back at it for our weekly chat. I have to apologize, listeners. I am a little bit under the weather this week. I'm also on the road, and the internet in this hotel that we recorded from is really reprehensible. It went out on us once or twice throughout the course of the podcast. So we recorded. I'm not sure that it's our finest work, but we didn't want to leave you without a podcast. I had to cancel some of the recordings I had scheduled for earlier in the week, so you will probably not get a Monday episode, at least not a full Monday conversation episode. But I'm on the mend. I'm feeling better. I sound worse than I am right now. So I will get back to recording some new episodes next week, and the cadence will pick up like normal from there. But apologies here for this little blip. Despite the fact that I'm on the road and not feeling great, we still wanted to get this episode out to you. But if anything seems particularly off, cut me a little slack on this one. So my email address is jacob@cognitive.investments if you want to talk to me about the podcast or what we do at CI, or if anything else is on your mind. Otherwise, cheers and see you out there. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. All right, on the road again here. Rob, I feel like yesterday I had the low, gravelly voice that you have when you have a cold, and today I feel like I sound like Britney Spears if she's been smoking two packs of cigarettes a day for the last 40 years. So, listeners, I'm sorry you didn't get the sexy version of this voice yesterday. Today it sucks. Nice to be with y'all.
Nice to be with you too, Jacob. But thankfully, your non-sexy voice is sexier than 95% of other people's voices, so we're in good shape here.
This is already going in a very strange direction. So I'm broadcasting to you live from Pleasant Prairie, Wisconsin, speaking to an audience here later today. But we're still making time for the podcast because that's how much we care about y'all. And we'll start with things. Rob, I know you've been seeing some interesting things with interest rates. So why don't you lay out what you were seeing, and maybe we can poke at some of the areas or some of the less appreciated areas. See what I did there? Where that might start to manifest.
Sure. So what's happening in markets? The big thing was 2 days ago, Jerome Powell came out and said that we're probably going to have to raise interest rates more than we previously thought. So he's acknowledging, that inflation is looking more durable than previously thought, that the labor market is looking more durable than previously thought. And as you can see, at the short end of the yield curve, rates are going up. So the 2-year Treasury bond yield right now is over 5% for the first time in a very long time. So that's the really big development. And that's something that we've been talking about a lot here in recent months, is this notion that, you're seeing reacceleration in the economy, and there's a lot of sort of structural factors causing this labor inflation, and the Fed is really worried about it. So on top of that, which we don't have to get into, I think it's worth keeping in mind, on the last podcast, we talked about the inventory cycle in the US and how goods inflation has been going down while it's been decelerating. It's not been negative, but it's been coming off the boil in a major way. And Powell mentioned this in his press conference last month after the Fed meeting. Now, this is really a vulnerable area, because if you look at what's happening in China, getting to the Chinese, factory gauge being off the charts last week, getting to what some large U.S. corporates are saying on their earnings calls about inventories and their expectations for consumer demand being higher than they were. What you're probably seeing now is a bottoming of the inventory cycle. So retailers in the US, Walmart, Target, companies like this are going to be rebuilding their inventories again because they've been working them down over the last 2 quarters or so. And if that happens, you're probably going to see a reacceleration in goods inflation. And that would be a big problem, because if Powell is saying, well, we can sort of declare victory on goods inflation over here, but we still have this major problem in services and labor inflation, and then the one thing that was going well starts to turn the other way, then you probably are going to have interest rate expectations go even higher than they are today. So there's a lot of moving parts around rates and inflation this week, especially.
Can I ask a dumb question? And like, when is Powell going to realize that there's more to the economy than interest rates, and that maybe what the Federal Reserve, like the tools that the Federal Reserve has, aren't actually going to drive down inflation? Like, is that a realization that is going to dawn at some point? Like, I don't want to throw shade at the central banks all around the world and the Federal Reserve, because they have a really difficult job, and I'm sure they've forgotten more about some of these things than I've ever known in my entire life. But it does seem like they keep on banging a square peg into a round hole and expecting they're going to get a different result. Like, they've been hiking, they thought they had victory, they don't have victory. Like, how long are they going to do this until they realize, like, maybe we need to think of like a different, you know what I'm saying? Like, this perspective doesn't seem to be working, but they don't seem to be willing to change their minds. They're just thinking, okay, we need more medicine, and more medicine will lead to a solution.
Well, oftentimes more medicine does lead to a solution if you use a shit ton of medicine. So
the operation was a success, but you killed the patient while you were at it, right?
Well, I don't think central bankers obviously know. Powell knows what his limitations are. But if you go back, look at Volcker, right? Look at Volcker in 1980. He came into the Fed chair, and in his early speeches, if you listen to the way that he talks about fiscal policy, oh my God, I mean, he's ripping the administration a new one. Basically saying, like, we've been irresponsible for 15 years. Now they want to reduce taxes and, supply side economics. And this is a disaster. And in response to that, we have to step it up, because we may not have every lever at our disposal, but we have that one hammer, and it can be a very, very big hammer. If you swing it hard enough, it can solve a lot of problems. And I think Powell is in a similar situation to a certain extent here, where he recognizes the fiscal expansion that we've seen. He recognizes, this is a guy who is a lifetime sort of public servant. How do you think he's responding to seeing the images of the U.S. Congress right now, the standoff over the debt ceiling, the unrestrained spending, all of it? This is galling to him without a doubt, right? So he has that one hammer, but I think in his mind, if he can do whatever he can with that hammer, he's going to do it, even if it's a very, very blunt instrument and he can't change the things that you would want to change, if that makes sense.
It does. It was also interesting that the White House came out this week and said that, that Biden's going to propose trimming federal budget deficits by $3 trillion over the next 10 years, which doesn't that mean net that, I think that's less than what he'll actually get in his big Inflation Reduction Act stimulus act, right? Like in the long term, he's going to be actually cutting spending more than he's going to be increasing it to a certain extent. And I imagine some of that is to placate the House and to sort of get ahead of the House hammering him on, fiscal profligacy and stuff like that. But it does seem like there's been a little bit of a change, at least from the U.S. government too, which is now also signaling, now we're going to tighten our belts a little bit as well.
Well, it'll be interesting to see if that actually gets done and in what form. It's pretty preliminary, the plan that's come out, but from what I've seen, it doesn't really address some of the core issues of, social entitlements, Social Security, liabilities, ballooning. That's the vast majority of the budget. So they're mostly focused on increasing revenues in ways that, we don't have to get into them here because they're still speculative, and I'm sure everyone and their uncle is, hemming and hawing over them on every podcast this week. But in ways that we'll just say Republicans probably won't get behind.
Yeah. Well, maybe let's seek out some of the underappreciated parts of the market where the inflation interest rate story is actually playing out. There was apparently some big conference in the energy space this week. And the Wall Street Journal, the Financial Times, everybody was quoting U.S. oil executives there were some pretty stark quotes saying that the U.S. had exhausted their best shale inventory, that the boom in oil production in the U.S. was over. There was, I believe it was the chief executive of ConocoPhillips said that the world was going back to the world that we had in the 70s and 80s, where OPEC was the dominant sort of oil swing producer. And about halfway or even 3/4 of the way through all the articles and summations of whatever happened at this conference, you get lines like, the slowdown was mostly because of investor pressure on companies to curtail spending and limit growth in favor of generating higher returns. So you're in this interesting place where yes, there's definitely depletion in some of the early shale wells, but there's probably more shale out there if you actually spent the money to explore and develop and things like that. I'm obviously not a petroleum engineer. I'm sure somebody's going to get on their high horse and tell me I'm a moron and I'm not saying the right things there. But I thought I would throw to you, what is the relationship between kind of raising interest rates and what we're seeing in the U.S. energy sector? Because the shale boom really did things geopolitically to the United States that I won't say unprecedented, because the United States was a huge energy producer, in the first half of the 20th century, but really insulated the U.S. from, developments abroad, allowed the U.S. to think beyond the Middle East. The reason in some ways that Europe's been able to survive its winter and the Russia-Ukraine war is because the United States is shipping as much LNG as they can over to help the Europeans. How does the interest rate story hit what we're seeing that's happening in the oil market?
Well, I think this gets back to what you were saying about interest rates being such a blunt tool. And in some areas, they're so blunt that they have the opposite effects from what one is trying to create. And energy is a great example of this. So that's exactly right. What you said is investors, if you were to rewind 6 or 7 years ago, investors were crazy for shale. And they were willing to underwrite huge losses and huge, negative free cash flow in the hopes of, larger cash flows getting spurted out of these things in the years ahead. That environment has completely changed now for two reasons. The first is just expectations over, long-term oil prices and long-term oil demand have changed for obvious reasons. But the other one is an interest rate story. The cost of capital has gone up substantially. So you're not willing to put capital endlessly into a shale company that in the way that you were when interest rates were, 0.5% and you couldn't get yield anywhere and everyone was stretching for growth and their time horizons were extended. So the ironic effect is that, all else equal, energy prices are going to go up and inflation is going to go up because the cost of capital is higher, not lower. So it has a topsy-turvy outcome.
I can't help but think this is going to be a big negative for the United States, because I think relative to maybe places like Europe, the United States has spent less on renewables and nuclear and things like that. And it's been able to do that because it has shale, it has all this oil, it has all this natural gas. If you get to a place by the end of the decade, whether it's because of depletion in oil wells or because investors aren't willing to stomach it or anything else, where the United States is actually suffering lower energy production, but it hasn't scaled up renewables the way that it should, or should is the wrong word, the way that it needs to, if it's not going to be able to rely on the shale revolution. There's not a lot of options out there. Then you have to go back to the Saudis and the Emiratis and the Kuwaitis and these others and say, okay, we have to start importing again. That would be quite a strategic reversal for the United States, which went from sort of not needing the Middle East at all to maybe having to re-engage with the Middle East once again.
Well, it's the difference between CapEx and OpEx, I think, if you want to put it in accounting terms. So the U.S. has been, as you point out, super successful in creating this self-sufficiency in energy. And, the shale revolution has been this incredible story over the last 15 years. But that's primarily because we've been willing to put the CapEx into building these things out. And they have notoriously fast decline rates. So you need to be on the treadmill of constant investment and that sort of thing in order to keep that stuff going. The benefit to countries like Saudi Arabia is that most of their assets are already in place. They're not on the treadmill. They're sort of juicing things that are already active and producing, and it's how much can you get out of it and how quickly do you work it down. For the most part, it's mostly an OpEx rather than CapEx story. And I think that's where things are headed. In a world where private capital, private oil companies don't want to put billions of dollars into the ground on a project that maybe they'll see a return on 10 years from now. There's just too much uncertainty for that. The way things are headed are, in a short time frame, how can you squeeze a little bit more out of the wells that you already have? So, we've talked a lot internally about enhanced oil recovery and some of the newer technologies around there. There was a piece that you put on the knowledge platform this week about Egypt, which is a tiny little minnow in terms of oil production. But Egypt put out a tender for, squeezing more oil and recovering more oil out of its very, very old wells. And that's a sign, I think, of what you're going to see much, much more of is OPEC. They will have more of an advantage, and is really sort of the marginal change in production will be much more driven by recovery or juicing production in existing wells or not, and how that impacts markets rather than new discoveries.
Before we leave that, just I'm continually shocked by how well Egypt has done here in the last year or two. Geopolitics, I think, does a really good job of focusing on crises or things that are bad. It's a little more difficult for geopolitics to say, hey, here's a positive story. And usually as soon as you start talking about something good that's happening, the clicks go away and they go back to, whatever clickbait they were looking at before. But Egypt's, a really good example of a country that in many ways is screwed. I mean, you've got 120 million people living on basically the size of the state of Maryland. Like if you actually, the places where you can actually live in Egypt on the Nile River, it's roughly the state of Maryland. It looks much bigger on a map, but that's what we're talking about here. They have to import their food. Yes, they have some energy production, but it's not great. Like you sort of put all these things together, like you would think from a sort of geopolitical constraint perspective, Egypt should be doing very badly. And Egypt's doing okay. Its international reserves are up. It's, as you said, launching tenders for getting more out of the oil wells that it has. It seems like Egypt is actually putting some things together and making the best of a bad situation. And I think we need to do a little more work on oil and also on Egypt in particular to talk about it at more depth. In some cases, I think the podcast is a starting point for some of our research rather than an end point. But I thought I would just throw out that Egypt in this macro environment, sort of like we talked about Japan either last week or a couple weeks ago, shouldn't be doing this well, and yet it seems to be doing okay. So is there anything real to that, or is it all smoke and mirrors? I think that's an interesting question to dive into a little bit more.
Well, just to follow up on that, how do you think their recent performance differs from, the 50 years up till 2015, where they did not perform particularly well, or at least they were not a development tiger by any means? Has something changed there?
Well, I don't know. They have a varied history when it comes from that point of view. Because, whatever you think about the Nasser government and their alignment with the Soviets, and Egypt wanted to be this leader of the Middle East, and it tried, and it really failed in large part because it didn't have the resource wealth that it wanted. When the Gulf and the Saudis really rose in power, it displaced the Egyptians. But I think in some ways, Egypt has always had fairly good governance. Things went off the rails a little bit when Hosni Mubarak got delusions of grandeur and thought not only was he going to be dictator for life, but he was going to hand off to his son, Gamal. And that was the political context of the Arab Spring in Egypt and why Mubarak eventually fell. It wasn't really a revolution that happened in Egypt. They kicked Mubarak out because the Egyptian street didn't want him to pass on leadership to his son, and he had sort of gotten old and out of touch. They experimented with democracy for a little bit and let Mohammed Morsi and the Muslim Brotherhood, run things for a couple of years. But the Egyptian military was always in control. And when they got tired of Morsi, they quietly, well, not so quietly, they got rid of Morsi and they put in El-Sisi. And it's sort of been very focused, very competent, pragmatic policy ever since then. So I wouldn't say that, Egypt is a beacon of perfect policy by any means. And in some ways, Egypt has really suffered from the wide availability of cheap grain. Like, I think before you had so much grain being grown across the world and exported, Egypt's population wouldn't have grown beyond Egypt's means. But because you could just import cheap wheat or cheap corn from abroad, Egypt's population has grown beyond what its domestic sort of agricultural supply can actually sustain. That's the reason it's in this difficult situation, and why Egypt has gone from being a breadbasket for a region to having to be this net importer. And there's nothing you can really do about that. You can't. You could try and be like China and have a one-child policy, I guess, but that sort of stuff is self-defeating. But I'm rambling a little bit. I think it's a mixed record for Egypt, but at least in the most recent period, military authoritarianism and dictatorship in Egypt has led to better policy and better planning, which is maybe not the thing that advocates of democracy want to hear. But at least in Egypt, that is the formula that has led to relative policy success.
So question, if Egypt's two biggest vulnerabilities are food and water, so I think I read this week when we were doing some wheat work that Egypt consumes 18 million bushels of wheat and it produces 9, so big deficit. And then the water issue is all around the GERD, and we've talked about this. It's a whole kettle of fish.
Well, I don't know that we've talked about it recently enough to just say GERD. That's the Grand Ethiopian Renaissance Dam there, guys. Rob didn't just get a fly down his throat. And this is the Ethiopian project to dam the Nile River upstream so that it can have power production. But that, of course, means less water downstream for the Egyptians. So, but finish your thought.
So if it's food and water, and those are the main vulnerabilities, like oftentimes you talk about China's vulnerabilities as far as commodity reliance, energy reliance, and how that shapes their imperatives. What are Egypt's imperatives? What does it need to do to protect itself?
Well, this is why the Grand Ethiopian Renaissance Dam is so worrying, because there is no Egypt without the Nile River. And if Ethiopia is going to suddenly have the ability to turn on or turn off the Nile River like a tap, or even if Ethiopia building dams along the Nile River reduces, water flow by 20 or 30%, or if there are other unforeseen environmental issues that come from damming the Nile River that far up that we haven't even thought about, it's existential for Egypt. And you would think that not only would you think, I have said in previous analyses, like, I don't see how Egypt allows this to go forward, and Egypt is going to have to do something to prevent this, because it doesn't seem to me like Egypt can live in a world where somebody else controls the flow to the Nile River. So I do think there's an imperative there, whether they try to solve that politically or with economic leverage or behind the scenes supporting divisions within Ethiopia, whether they think of a military solution. I mean, I think that has to be one thing. The other issue here is that Egypt is sort of locked into, it has to have good relations with the Saudis because it needs funding from the Saudis to do a lot of the things that they want. Egypt is nominally a U.S., I don't know that I'd call them an ally, but let's call them a strategic partner in the region. But they import an awful lot of grains from Russia, so they can't just sort of turn their back there either. They've got the Suez Canal there too. So, they want global shipping to continue, and maybe they want to harvest as much capital as they can out of the Suez as well. This is why I say Egypt has a lot of constraints. There aren't a lot of good options for Egypt to try and solve a lot of their pressing issues. And you would expect a country in that situation to not do so well, but at least on sort of a basic level, like, they're not having the Pakistan experience or the Sri Lanka experience. Like, They've already have a deal with the IMF. They've already instituted some tough medicine, some cuts in the population. They're thinking long term about, as you said, squeezing as much oil as they can out of oil wells, getting everything they can out of the resources that they do have. And that's a positive story. Before we leave the Middle East, I don't have a ton to say about this yet, but we've talked a lot about Turkey on this podcast, so probably worth saying that Turkey's main opposition parties have agreed to and basically band together in an alliance and nominate somebody to run against President Erdogan in the upcoming elections. I'm going to butcher his name. I believe it is Kemal Kılıçdaroğlu, and I will get better at that as we go, listeners. Turkish listeners, please write in and give me any advice you have about how to pronounce that name correctly. But I think the interesting thing here is just to note that in the polls, Erdogan continues not to do particularly well, and he's had a really bad run of it lately. Inflation in Turkey has been very high. He's got his unorthodox monetary policy. Then he has the earthquake. The earthquake was very tragic. It also put some pressure on Erdogan himself because he wasn't seen as necessarily jumping in quite as quickly as maybe some people wanted him to. There's also really just interesting parallels to when Erdogan came to power. He came to power amidst an inflation crisis and amidst a weakening Turkish lira and amidst an earthquake that caused a lot of problems in Turkey as well. So he knows this playbook extremely well. The question will be, how fair are elections going to be? And if Erdogan does not win, which is a big if, does he just say, okay, like I recognize the democratic will of the Turkish people and go away? Does he start saying, no, this election was a fraud and I have to crack down? It's going to be a very interesting, bumpy couple of months here for Turkey. And when I'm on the road here, I'm giving a presentation later today. Turkey is in my, long term, things look good for Turkey, but over the next 6 to 12 months, things look kind of scary there because there's a lot of uncertainty. It's really not clear to me which direction this is going to go.
And what do you think we should be looking for, Jacob? Because if you look at Turkish history in the last 70 years, always they've had regime change or coup following inflation and sort of this exact set of circumstances, as you point out. So I think your base case has to be that he's going to lose the election. Like, regardless of what the polls are, that's probably where you should start. So what should we be, or what are you watching for when you're trying to see any signs that he is preparing to resist?
I mean, we're sort of in the end game here where, in some ways, the type of fundamental geopolitical analysis that I'm good at, it's less good at helping you in these particular moments. Like, what you need right now is you need somebody to be having breakfast with Erdogan every day and taking a temperature on where his head is at and whether he's feeling like he did good things and is ready to, accept a result of an election, or whether he's doubling down and thinks that he should be president for the rest of his life. So that's a really elegant cop-out of saying that there's really no geopolitical things to look for anymore. We can talk about, Turkey's sort of long-term 3 to 5 year geopolitical horizon. It's basically the same, whether it's Erdogan or Kılıçdaroğlu or any other Turkish leader. The question is sort of what's going to happen over the next 3 to 6 months with really unpredictable variables. How many Turks are going to go to the polls? What are the polls actually going to return in terms of results? What is Erdogan going to do if the results don't go his way? What is the Turkish military, which has been restocked with officers who are loyal to Erdogan? Which way are they going to go? They've been the protector/intervener in Turkish democracy for multiple generations. Are they going to intervene again? Do they start saying anything? Does the opposition remain firmly behind this particular candidate? It looked like last week they weren't going to be able to nominate a candidate, and suddenly they were able to come together and agree on this guy. So it's really those types of very volatile variables that you sort of have to track in real time. And you kind of go from there. It's a time to be very flexible. And in some ways, we know the scenarios, like there's Erdogan wins, Erdogan loses, a coup. You can sort of delineate all those out. But, geopolitics is not of much more use here. It's much more about intelligence and much more about trying to just track the changes on a weekly and even daily basis when it comes to Turkey right now, which is one of the reasons I like from an investment perspective right now. I mean, if you can think about how to invest in Turkey in the long term without exposing yourself to the volatility, that's an interesting sort of place to be. But I don't think you can avoid the volatility right now. It's why in the past on this podcast, the last 2 to 3 years, we've been very bullish on Turkey in general. But at least from a geopolitical risk perspective, now is the time to be very, very cautious, because in this very short time frame and with this event coming up, it's hard to say anything with absolute certainty. Before we close out, because internet is, as I said, is difficult here, but we want to squeeze in at least one more topic of conversation, which I think the biggest news of the week is going to go fairly underreported, but it was this deal between South Korea and Japan to try and get relations back on track. So the South Korean government basically agreed that a private foundation should be set up to compensate victims who won lawsuits against Japanese companies for forced labor during the Japanese occupation of the Korean Peninsula. If you weren't following this very closely, and most of you probably weren't, South Korea's Supreme Court in 2018 ordered 2 Japanese companies to pay compensation to Korean laborers and their heirs. And it really caused a major problem in Japan-South Korea relations. And it wasn't just at the diplomatic level. Japan imposed some fairly onerous export restrictions on Japanese companies that were exporting to South Korea. Everybody's talking about Taiwan and semiconductor supply chains. In some ways, the things that Japan did with its own trade relationship with South Korea, that was also a big problem in semiconductor supply chains. And some of those things have stayed in place to the point where South Korea is thinking about standing up parts of its own domestic semiconductor industry so it's not so dependent on Japan from importing abroad. This is a major change, and it's the new South Korean president. This is another name that I had to look up. I believe it's Yoon Suk Yeol as I think is how you pronounce it. But if you're a South Korean listener, please write in and let me know that I'm butchering it terribly. But the upshot here is that even though the South Korean president was elected by a fairly razor thin majority, he will probably be the South Korean president until 2027. So on the one hand, you would think that as soon as South Korea's opposition comes back into power, they can just repudiate this deal and say, we don't have to deal with this at all, and we're just going to go back to what we were doing before. That's what happened in 2018. But at least out to 2027, you've got maybe better relations between South Korea and Japan. And that's a big deal when you think about it in the grand scheme of things.
So let me ask a stupid question, because from someone who follows this sort of from afar, like I know there's been a lot of reconciliation events between Japan and Korea. Japan made a very high profile apology back in the 90s, right? I mean, it was quite a long time ago. And then a series of things like that where they're trying to close the book on this period of history. Why is this any different? Is this going to meaningfully change the way that they feel about each other? Or is it really just a legal issue that's coming to a conclusion here? Why is this the biggest story of the week?
I don't think it's necessarily going to change how South Koreans feel about Japan. And there's already been a lot of protests from South Korean trade unions and obviously the South Korean opposition party about this deal. And I think it's important to remember that South Korea in general, when it thinks about its greatest geopolitical rivals and threats, I think most people would assume that they think about China. It's not really. It's really Japan has always been the big threat to the Korean Peninsula. South Korean historical memory is of Japan raiding its way through the Korean Peninsula on the way to China, whereas China was always seen as more of a sort of benevolent dictator. The metaphor I've always used is that China treated the Korean Peninsula more like a vassal state, whereas Japan treated the Korean Peninsula more like just a straight up colony and did whatever they wanted there. And that came with its whole host of issues. But it's not necessarily going to change things in terms of how Koreans feel about Japan, but it is going to smooth out some of the diplomatic roadblocks that have been there between the South Korean government and the Japanese government. I don't think that this South Korean government could move forward in improving ties with Japan, which is what Yoon wants to do, without figuring out this issue, because this was a main stumbling block here. Now, for as long as he is president, he's gotten the stumbling block out of the way. he's at least going to try. He at least now has an open highway to try and improve relations a little bit with Japan that maybe he didn't have before. Now there could totally be a backlash, and none of it's going to work, and it's all going to blow up in his face, and it very could revert in a couple years' time once there's a new president. But I think the news here is that South Korea and Japan relations, even if it's on a temporary basis here for the next couple of years, should be a little bit better. It's also just a very important development for Japan. There's a quote from a former Japanese ambassador to the United States from the early 1900s that I love repeating, where he says that Korea is a spear to the heart pointed at the Japanese empire. So if Japan sees a Korea that is hostile to it, or that it has to worry about from a geopolitical perspective, that's a serious challenge to sort of Japan's ability to operate in its own backyard. And Japan right now needs to worry about China. It doesn't need to be worrying about South Korea and the spear pointed at its heart. So if the Japanese government feels like it has a partner in South Korea and it can at least work with them on a pragmatic basis for a couple of years, it also frees up Japan to think more about China and not to worry so much about what's happening on the Korean Peninsula, and even maybe to try and build relations back with the Korean Peninsula. But this is also another interesting thing to watch. So this deal, instead of Japanese companies having to compensate these laborers and their heirs directly, there's going to be a private foundation set up. Japanese companies better contribute to that foundation. If this is just like the South Korean government putting money there, so it's a bait and switch and Japan doesn't actually have to pay for it, and these Japanese companies are like, thank God, like we got off the hook and we don't have to deal with these stupid Koreans. If that is the attitude that it takes in Japan, it might actually have the opposite effect of what both sides are looking at here. But I sense that probably what the Japanese government is doing is saying, okay, like we saved face here. Like all the old apologies, all the old treaties, they're all in place. A South Korean government has now recognized those things. Let's put some money in this foundation and let's try and make this problem go away so that we can not focus on this smaller issue and think more about the bigger issue that we're dealing with in terms of China.
And on a related subject, there was a piece on the Knowledge platform this week where North Korea said something along the lines of, if the U.S. interferes with its missile program or missile launches in any way, or its tests, that it would be considered an act of open warfare, I think, something along that. It's so hard to parse out when something is meaningful, because the news seems to always report, these bombastic statements by the North Koreans. What is the status there? I mean, North Korea has been very active. How should we be thinking about their relationship with the South, their leverage, if any, over the South? And what does that do to South Korea's decisions?
Yeah, North Korea is a gift to all analysts because nobody knows what's going on inside North Korea. Like none of us have a finger on the pulse there. Nobody has access to what's going on in the ground. So it allows people to pontificate and just use North Korea as a blank canvas. I'll be honest and say I have no idea what's going on in North Korea. And I think that anybody that tells you they know what's going on in North Korea is lying to you. There's really no way to get a good sense of what is going on. The country that is probably most plugged in to what's going on in North Korea is South Korea. Their intelligence agencies, all of their connections and ties to North Korea, they're the ones that at least have a shot of trying to interpret the signals and having some idea of what's going on there. I don't see anything appreciably different in North Korea's behavior this year than in previous years. North Korea responded, I think, to the Trump administration's willingness to sit down with Kim and to try a different way, a different manner of diplomacy to try and improve relations. When the Biden administration came in and it was business as usual, they sort of went back to doing the things that they've always done. So I think from the South Korean perspective, and at least the previous South Korean government, I don't think that Yoon, who's the current South Korean president, thinks this, but the previous South Korean government, which was led by Moon Jae-in, they felt, I think on the long term, that North Korea was an opportunity, that the reunification of the Korean Peninsula would be a major economic benefit, and that the South Korean government should work to, over time, building trust and building credibility and trying to smooth out the relationship so that you can get a sort of, East-West Germany reunification moment in Korea. This South Korean government, it wants to be friendlier to Japan. It wants to do military drills and be friendlier with the United States. It distrusts North Korea. And it wants to respond to North Korea not with, we'll have, friendship delegations and we'll meet at the border and shake hands and have a photo op. This South Korean government wants more deterrence and more cooperation with Japan, and wants to show North Korea, hey, like, none of your threats scare us, and we're going to beef up our own capabilities so that you understand that we are the stronger ones in this relationship. But when you sort of zoom out at the very, very broad level, the division on the Korean Peninsula, it's artificial. It's a holdover not just of the Cold War, but it's also a holdover of World War II and Japan's attempt to build an empire in the Asia Pacific region. That there is no North and South Korea 200 and 300 years ago. There's only a unified Korean peninsula. You draw that line in between them because they're different zones of occupation, after the end of World War II, and they get frozen where they are because of the Cold War, and the Korean War sort of puts them in place. So I think that the way that South Korea looks at North Korea is probably the mirror image of how North Korea looks at South Korea. Neither side thinks that there should be a division on the peninsula, and both sides understand that if Korea was unified, they'd be in a much stronger position to have independent foreign policy and protect Korean sovereignty versus a Japan or versus a China right now. But that's just sort of not where it is. So anyway, I ramble a little bit there, but you asked what's going on in North Korea. Nobody knows what's going on in North Korea. I don't see that North Korea has done anything recently that is beyond the pale for them. It seems to me that they're just doing their usual thing and trying to keep everybody else on their toes. And they're being reactionary. To the extent that North Korea is doing more stuff, North Korea is doing more stuff because the South Korean government is doing more stuff. The South Korean government is making deals with Japan and saying things to the United States and doing military drills for the first time again. They're not so cooperative. So North Korea is responding in kind. I don't think it's that North Korea is making waves here. They're really the reactionary power.
Are there any historical examples of two, I don't want to say two states, but two separate regimes merging that are historically of the same state or the same cultural background or ethnicity? Because Germany is such a weird example, and it only happened after the Soviet Union collapsed, really. If they were to reunify at some point, how would that practically play out?
That's the 10 trillion won question, right? I wouldn't throw out the experience of Germany, because the German division there is also somewhat artificial and a holdover of the Cold War. The difference was East Germany was just more ready to unify, whereas North Korea has built this crazy, fanatical, cultish. What was it? I think Christopher Hitchens described North Korea as a necrocracy, where they still worship the departed leaders. Like, none of the former North Korean dictators who have died, like, they're still technically heads of state when you get down to it. But I mean, if we look over time, I mean, I'm shooting from the hip here, but I imagine Czechoslovakia would be one that you would want to play with, even though Czechs and Slovaks were different ethnicities. They were close enough that they unified for a while. You could go back in time to, this is not reunification, but the union of Scotland and England sort of back in the 1700s might be an interesting place to look. That was really driven by the Scottish government's financial needs at the time, and they were willing to sign off Scottish sovereignty so that Scotland didn't go bankrupt. But I'd have to do a little more focused research to try and find maybe a more analogous situation. I don't think we're going to find many. I mean, when I say that the division between North and South Korea is very artificial, I mean, it's a weird sort of byproduct of geopolitics. And I always pair it with the other very weird sort of holdover from that time period is the situation in Iran today. There's no reason that Iran should be ruled by this theocratic government and should be having all these problems with the rest of the world. But because Iran got caught in all these Cold War machinations, it gave power. And I should also say, I like to pair them because the Korean War and the takedown of Mossadegh by the UK and the United States and the CIA and all these other things, that was a democratically elected Iranian president that the United States and the UK worked together to basically overthrow so that they could put the Shah back in power, which leads directly to the Iranian Revolution. All that stuff is peak Cold War. And while some parts of the Cold War have washed away, to your point, like Germany reunified, Iran is still out on an island and the Korean Peninsula is still sort of divided. So I don't know that we'll find many historical analogs. Maybe the listeners will tell us there's one that we're not thinking of, but I think Germany is the best one. It's just that North Korea went nuts. They drank the Kool-Aid while they were often divided. With that, and I think we'll say grace that our internet lasted this long. I feel like I'm not in the immortal words of Al Swearingen, I feel like I'm not my full fucking self right now. So thanks for bearing with me through this cold, listeners, and hopefully we'll be back at it next week stronger than ever. Rob, until next time, cheers, man.
Happy trial.
Thank you so much for listening to the Cognitive Dissidence podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.